tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where we get you answers for all your stock-related queries. And we also get you Buy Now, Sell Now Pachala today as it's Friday. But before that, let's have a look at what the markets are up to. So Cheryl, finally a tinge of green coming in. Good gains coming in for the benchmark indices.
Absolutely. A very good morning to you, Shrishti. And I'm feeling very happy that we are donning the color of very nice weekendy color. It's like nice and bright and green on the screen. Yes, some sort of a ray of hope coming in, at least for the Indian benchmark indices. As you can see, 0.5% uptick coming in for the Indian markets as we speak. You have Nifty that is surpassed the 19,400 levels. You have Sensex that is seeing gains of upwards of about 300 points. You have Nifty Bank that is seeing gains in tandem of that of the benchmark indices. Broader markets also once again actually outperforming the benchmark indices. It is actually the small cap index that's outperforming the benchmark indices once again in today's trading session. So if you take a look at the list of gainers, then you have Cipla that is seeing a gain of about 3.5% or so, almost 4% right now. Is the top gainer on the Nifty. You have the Economic Times that is reported on the promoter stake sale. Apparently Blackstone also is set to have go ahead with a non-binding bid. So on back of that, you have Cipla that is seeing good gains of about 3.9%. You have Wipro that is seeing gains of 2%, LTI Mindtree, HCL Tech Mahindra, TCS. So yes, you have the IT making a good solid comeback in today's trading session. But on the flip side is Bajaj Auto, Tata Motors that are actually declining in trade. Add to that list Sun Pharma, Power Grid also are the ones that are seeing some sort of selling pressure. But talking about the sectoral indices, then you have the auto index that's seeing mild bit of red. Apart from that, all the sectoral indices are in the positive territory, with the IT index taking the lead, 1.4% uptick coming in for the IT index. PSU Bank, 0.7%. Pharma also seeing 0.5% of gain. So that's the way how the market setup is looking like. Nice and bright and green is what I can say on the screen, Shrishti, for today.
Well, yes, absolutely. But let's move on, viewers, and let's get on board Kunal Bothra. He's joining us live from the studios. And let's go across to him to find out which interesting topic he's going to be teaching us today. So, Kunal, over to you.
Srishti, good morning. Cheryl, good morning to you as well as to all the viewers. And today's topic is very classical because we all find a question that how do you ride stocks which are trending up high and how do you ride and eventually these stocks become multi-baggers as such. So, one of the simplest methods to do is to use the 200-day moving average on individual stocks and then trying to bifurcate or identify which are the stocks which are extremely strong, which are the ones which are extremely weak, and do you want to average the weaker stocks or do you want to average the stronger names. So I've taken classical examples over here. The first example of 200-day moving average and how to ride the trends for stock prices is on Abbott India. This is the charts over the last 8 to 9 months for the stock. And we've seen classically that Abbott India, when the stock crosses about the 200-day moving average, the trends sustain for a longer period of time. And the more the stock is above the long-term averages, the more is the probability that the stock would resume, continue its uptrend even after a phase of a pause for itself. So look at the last 8-9 months of charts for Abbott India from a point where the stock was almost at 18,500 end of 2022. It gradually moved into that upward trend trajectory move, and the stock is now perched at 24,500 mark. This gives you a classical concept of how the long-term averages. This is the 200-day moving average, the red line which you can see, and the stock in the process of the last 8 or 9 months of the subtrend has not broken even once below the long-term average. But on the other hand, which are the stocks which we should ideally avoid when you're looking to buy the stock or looking to time the stock? This is one example like this for Aarti Industries stock where we receive a lot of queries. Look at the last 8-9 months of charts, a very similar kind of a time frame, but the stock has been consistently trading below the long-term averages, and these are the kind of stocks which you should ideally avoid because this indicates that the long-term trend for the stock is still on the negative side. You may hold on to the stock, may not look to average, but then averaging out should be done only once the stock crosses back above the 200-day moving average. And one of the classical stocks which has done exceptionally well, the entire sector which has done exceptionally well, something like HAL, the stock which was almost at 500 rupees end of 2020, start of 2021, has yet not broken below the 200-day moving average. And you've seen how the stock has multiplied from 500, the stock is now almost at 4,000 rupees. So that's a classical sign of how do you identify the importance of 200-day moving average and ride the winners and don't put your money on the losers.
Right, that's the way how you can ride the winners by actually taking note of what's the importance of the 200 DMA. And actually, that's been a question in a lot of viewers' mind, especially in-house as well. Even our producer Abhishek also was very interested to understand what's the importance of 200 DMA. And thank you so much, Kunal, for explaining that to our producer as well as all of our viewers. But viewers, on that note, we'll slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll start taking your queries, so do write into us. Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, you can write to us on the number that will be appearing on your screen very shortly. Do remember to mention your name, the stock that you're invested in, and if you've already invested in a stock, then do mention the buy price, the quantity, as well as the time horizon. In that way, our experts will be able to help you better. And talking about our experts, today we have Kunal Bothra as well as Mr. Chokalingam joining us on the show. Very good morning to you, Mr. Chokalingam, as well as Kunal. Thank you so much for joining us on ET Now. And yes, happy Friday to both of you all as well. I greeted actually Shrishti this morning on that particular front. But let's take the queries then. And the first one is coming from Reema. She's writing to us all the way from Pune. But her question is on Rajesh Exports, Kunal. She's wondering if it's a good time to enter this particular counter. Also, she's been holding to Bajaj Finserv for some more time. Her average price is 1,422 rupees per share. So she wants to know whether she should stay put with Bajaj Finserv and also what to do with Rajesh Exports. Do you think Rajesh Exports is worth the stock to buy?
Well, yeah, I would believe so that it's worth holding on to the stock. It's very close to its long-term support. Now, 475 is apparently the long-term support for Rajesh Exports. I think the stock is at 515 levels. So maybe I think another 20 rupees on the downside, 495 odd levels is where you can start averaging out for Rajesh Exports, because if the stock comes back to that 475 mark, we've seen historically that the stock has taken a lot of support and there's demand which rises up for the stock at those levels, and you see an eventual bounce back or a turn for the stock price. It's just that for the last, I think, 6 years, the stock has been into a range of 500 broadly on the support towards 950 on the upside, which is acting as a resistance. So maybe sooner or later the stock would break out, but I think sub 500 is where you can start nibbling into the stock. Bajaj Finserv also looks fairly attractive. In fact, I've given a buy call on a short-term basis, expecting the stock to bottom out given the oversold nature of indicators. So you can continue to hold on to that stock as well.
Okay, moving on, and Mr. Chokalingam, coming to you for the next query. This one is from Hamza, and she wants to know that can she buy Indian Hotels at this point in time? The stock is already near to its all-time high levels, but given the recent run-up, will you still be a buyer?
The hotel industry, if you look at last 20 years, it's always cyclical. Stock prices are also highly cyclical, and there is no, very significant valuation comfort also at this price. It's a great stock. The kind of hotel assets they have, it's fantastic. But I would say that, in case it corrects at least 10%, then one can consider buying Indian hotels.
All right. This next query that I have is coming in from Sunny, and I believe he wants to know about Barbecue Nation. He wants to know if better times are coming up for this particular name. He's holding since the level of 655 rupees per share, Kunal.
I'm not sure of that, because the stock is still reeling under some major selling pressure. No major change in terms of indicators. The recent run-up is on the back of some tepid volumes. I would not say very strong volumes, but the stock would need a lot of confirmation of a breakout. So I would probably suggest not to average in case if you already bought. I would believe maybe some more confirmation on the monthly charts, maybe 1 or 2 months of consecutive price action where the stock gains, say 5%, 7% on an average. That's where we may expect a turnaround, but I think that should be maybe a couple of months away in terms of confirmation. So I'll suggest a hold, not to average at current levels further.
Okay, moving on to the next query then, and Kunal, this one is from Ramamurthy. He wants to know, what's your take on Varun Beverages as well as MCX? Can you advise him on any buy price as such where he could enter?
Varun Beverages, my sense is that the stock should go into a major correction from current levels. I would believe that maybe 700, 750, that's actually a much better zone to buy the stock rather than buying the stock on a breakout, because the stock has this tendency of going into those odd phases of correction every now and then. So I would suggest an avoid as of now, but closer to 700, 750 mark is where you can look to buy. Even for MCX, the stock is extremely high beta. couple of days back, the stock had given a signs of a breakdown on the short-term charts. Expecting MCX also to get into a correction. 1450, 1500, that's a zone where you can look to buy the stock if you're looking to buy on dips.
Okay, this next one is coming from Sandeep Kumar. He's writing to us from Tamil Nadu. This one is for you, Mr. Chokalingam. He wants to know which is the best FMCG and auto stock to hold for the next 3 to 4 years in the large cap space apart from ITC.
You can definitely consider Maruti. Of course, the meeting is there, board meeting to decide on the valuation of acquiring the parent company. But I'm pretty confident that this time Maruti will not make a mistake, because about 6-7 years ago, they made a mistake of starting as a subsidiary and Maruti stock was punished very badly. So based on that assumption, I would say that we should look at Maruti for medium to long term. And secondly, in FMCG, I would still go with Hindustan Unilever.
Okay, Mr. Chokalingam, what's your take on KNR Construction? Srinivasan from Kerala has bought 450 shares rather at a price of 230 rupees. So the mine profits right now, but he's a long-term investor. So can he add more, and what's the outlook going ahead?
KNR, I looked at the fundamental, it looks quite good. He can hold on to it, but for adding, maybe if it falls even 5%, then he can consider adding it.
Okay, another one your way, Mr. Chokalingam. Actually, this one is from Narveer Jadhav. He's writing to us from Hyderabad. And he wants to know about IRFC. He's already entered this particular counter at a price of 38 rupees per share. He has 1800 shares of IRFC in his portfolio. He wants to know whether he should keep this company or the stock in his portfolio for the long run, say around 2 years, or should he look to book profits and look to re-enter the stock once again? Do you think that that's a good strategy to book out profits in IRFC and then look to re-enter this one, or should he look to use that fund? If you're advising him to book out, then should he use that fund to buy something else instead?
If you look at the PSU stocks for last 30 years from 90s, clearly every 3 years they have up cycle and then down cycle. Whatever is the performance, whatever is the valuation. So somehow this you can't avoid. So therefore, based on this historical learning and also the kind of run up, most of the stocks have gone up. I see that it is better to sell on rise rather than buying or holding it.
Okay, moving on, and Kunal, the next query is from Ashok B from Chennai, and that's an FNO query. He's saying that he's holding short positions on Nifty, August expiry at 19,100, and he's been rolling over that from June onwards. So any advice what to do in this one?
See, I think if you ask me from a very short-term basis, yesterday's low was a very critical low for the index, where it seems like most of the indicators were oversold. So there should be a reasonable bounce on the Nifty from yesterday's low. I've been maintaining that view since yesterday on the closing segment. So I would believe 19,650, 700, I think that should be tested in this leg of uptrend. So I'm not sure what's your average or net price after rolling over for 2 months for the Nifty short positions, but I think if you can look to maybe exit and then rebuild your position at 19,700, that could probably give you a more buffer of another 200 to 50 points.
Okay, this next one is coming in from Mr. Rao. He's a long-term investor and he currently has Cummins in his portfolio, 100 shares at a price of average price of 1,670 rupees per share. He's saying the stock has fallen down more than 5.5%. Can he look to add more average for the long term of around 2 to 3 years for better gains? This is in light of yesterday's announcement of separation of their filtration business. So this is related to the earnings, the corporate announcement that the company has done. Mr. Chokalingam, what's your take on Cummins? Do you think Mr. Rao should stay put with this one and look to average out by adding some more shares? Or what sort of strategy should he adopt for Cummins India?
I think at current price, it's a sell based on the valuation, and also after that, one can wait for the corporate development to decide whether to buy.
Okay, Kunal, Ajay wants to know that how is the technical setup looking for Bajaj Consumer as well as Affle India? Any significant up move that he could wait for in both of these names?
So I think both Affle India looks attractive at current levels. 1120 is where it's trading, formed a bullish flag pattern on the weekly charts. So that should probably, if the breakout is successful, that should take the stock higher to almost 1300 plus levels over the near term. say in the next 3 to 6 months or so. And even for Bajaj consumers, I think this seems to be a decent turnaround of sorts for the stock. In the last 4 months, it's recovered from 150 to now 226 plus levels. The recent swing high was around 300 mark, or in fact the multi-month swing high was around 300 levels, which means that possibly the stock should come back towards at least 275, 280 before we see some fatigue coming into the rally. So I would suggest hold on both of these stocks.
All right. This next query that I have is coming in. This one is coming in from Mani from Chennai. Has 200 shares of Titan at a price of 2,450 rupees per share. Should he hold or exit, Kunal?
I think you should definitely look to hold. In fact, we were discussing this yesterday that Titan has been one of the consistent compounders over the last, not just last couple of years, but over the last couple of decades. And I think that's a stock which you should regularly look to hold. The stock is still trading above the long-term averages. That makes the chart patterns all the more lucrative for Titan. So I would suggest a hold on Titan.
Okay, Mr. Chockalingam, Bharadwaj is holding 220 shares of KRBL from a price of 236 rupees, sitting at a decent gains in this one. So, what's the outlook going ahead? He can continue holding this for the next 2 to 3 years.
We all know that the grain prices have gone up substantially, and that would be negative for a player like KRBL. So, therefore, I would give sell call at the current price.
All right. This next query that I have is coming in from Sonu from Bangalore. Wants to ask you, Mr. Chockalingam, 1,000 shares of Bank of Maharashtra at an average price of 30 rupees per share. Can hold it for the long term for the next 2 to 3 years. Also, the viewer saying can add some more of this particular counter. And apart from this query, Kunal, the viewer also has said thank you to you for your Pathshala edition of today, the importance of 200 DMA. So yeah, Mr. Chockalingam, Bank of Maharashtra, still the thumbs up for this particular counter. Do you think add more?
Certainly, yes. I personally do not hold, but I regret for that. It is an amazing stock. The kind of performance, whether it is financial or quality of assets, I would say that it is in the top 2 or 3 among all the listed banks. In 16 parameters, this bank scores number 1 in business and quality parameters. The most important point which I liked from this bank is after going through the con-call script. We all know that ECL is coming. That is extra provision norm is being implemented from the current fiscal. I was quite impressed by the management when it said that already they started making the provision for that starting from the Q1. So the pain on ECL provision is going to be minimal for this. Same time, the growth is strong at a double digit, profit growth also strong at double digit. I maintain the view that in terms of quality of parameters, it is like mini HDFC Bank to me, not in terms of price point, in terms of relative parameters. So therefore, this is one of the best stocks for the long term.
Okay, Kunal, the next query is coming from Apala Raju from Bangalore. Firstly, he's thanking you for your advice on Ashoka Buildcoin. And secondly, he wants now your take on Aurobindo Pharma. He's been holding 200 shares from a price of 800 rupees. And in this one, he entered back in 2018. And as we know that how volatile Aurobindo Pharma was, now he's sitting at a profits. But after the almost 90% plus run-up since the start of the year, what will be your advice? Should he continue to hold on? And once the outlook in the short to medium term, hold or sell?
See, I think it's going to be tricky because, Aurobindo Pharma or the rally for Aurobindo Pharma comes at a point when most of the pharma stocks or the pharma index has come back towards the life high for itself. And most of the pharma stocks are coming back to their 52-week highs, multi-year highs, as the case may be. So I think in that regards, there could be more medium-term to long-term theme upside for the pharma stocks. But, periodically we've seen that stocks like Aurobindo Pharma, which deliver some excellent returns in a short span of time, they tend to go into a major time-wise correction. So, look at it this way, that from a YTD basis, the stock is up some 90%, 91% for itself. Now, how much more can you expect that the stock to deliver return for the next 5-6 months of this calendar year? And that's going to be a tall ask for a stock to continuously maintain that upward trend. And it's bound to be getting into a time-wise correction. So I think it's better to try and book out profits over here and then look to buy back or come back into those formidable large cap pharma names. That could actually work out to be a better risk reward strategy from current levels.
All right, the next one also is for you, Kunal, from Hitesh, and he wants to know good levels to enter Macrotech developers as well as Godrej Properties for the long term.
So So Loda is something which it doesn't look attractive to me on the charts. Frankly, I would probably suggest an alternative for Macrotech towards maybe DLF at current levels. Anantraj has been something which I've been recommending consistently. I think the stock just recently broke past about the 200 levels. So that's a good buy on dips candidate. Maybe at 187, if the stock comes back to that corrective phase, you can look to buy the stock. Godrej Properties, yes, you can look to buy. In fact, the stock has also given a decent correction in last 10 days. I think from 1750 to now 1550 odd levels. So you can start at current levels, keep some powder dry in case if the stock falls by another 100 rupees on the downside.
Okay, Mr. Chokalingam, what's your outlook on GAIL? Reena Thomas from Kerala has bought 600 shares from a price of 121 rupees. This share has been quite volatile after the recent UBS upgrade. The stock was seeing a good move, but post the earnings is seen a fall as well. So what's your take on GAIL? And since Reema is also concerned that this is slowly and steadily coming down, so what should be the next course of action?
I think the investors should sell based on the valuation, and also, as you said, it's extremely volatile in terms of stock price performance as well as in terms of quarterly financial performance. So I would give a sell call on GAIL.
All right then, on that note, actually we'll slip into a break on this edition of Buy Now Sell Now with the note that Nifty has now reclaimed 19,500 mark once again. But we're slipping into a break. When we come back, we'll continue taking your queries. Don't go anywhere.
Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all your stock-related queries. And on to the show today to guide you better, we have Kunal Bothra as well as Mr. G. Chokalingam with us. So let's move on to the next query then. And Kunal, the next query is for you. This one is from Sarma from Sikandrabad, and he's holding 75 shares of Global Health from a price of 447 rupees. Wants to know, is this a time to book profits as the price movement has reversed since the last few days? So what should he do?
Well, apologies, I don't track the stocks. I won't be able to offer any comment.
Okay, no worries. Mr. Chokalingam, any take on Global Health from your side?
Yeah, I looked at all these healthcare companies. The valuation company is not there. So I think it's a good sell now.
Good time to exit. That's the take on Global Health. But moving on, the next query is on Radico Khaitan. Kunal, Pradeep has bought 20 shares of Radico Khaitan from a price of 810 rupees. Whether to exit this particular counter or hold on?
Well, I'll suggest to hold on as of now. No signs of the stock entering into an overbought territory. Yes, there are some congestion zones which the stock has been entering. So, for example, last month, the stock took a range of 1300 to 1400 broadly as a 100-point trading range. This month so far, the stock is into a range of 1420 to 1480 approximately. So it's been sticking on to a range, but then with every range, if the supports rise up higher, then I think that's considered to be a good sign for stock prices. So I would suggest to hold on, keep maybe 1400 broadly as a closing based stop loss. In case if the stock happens to close below those levels, that could be a point where you may look to book profits on Radico.
Okay, Kunal, once again the query is for you. This one is from Satya Veni. He's a senior citizen, lives in Visakhapatnam. He's a huge fan and he's also a long-term investor and wants to know, can he enter into Zomato as well as NCC now? Zomato, no doubts, after turning profitable finally, seeing stellar gains today. So at this point, should he enter or wait for some correction, and what's the take on NCC?
See, I understand that it's always better to buy stocks, which are showing signs of a fundamental turnaround. But then, you also have to look at that whether the prices have already factored in most of the rally or not. And I believe that for the case of Zomato, it seems like that doesn't mean that the stock may not have a major upside, but then the risk reward of entering the stock at current levels could be a bit tricky. So the best way to try and mitigate this is keep your position size low. So if you're looking to buy X number of shares, then I think you can buy just 50% of the shares which you are looking to add at maybe on an average basis. So that's the tweak which you can do for Zomato, and then maybe wait for correction. If it happens, say in the next 1 to 3 months and the stock say comes back towards 84-85 mark, look to add further or the balance 50%. NCC also a very similar kind of a strategy. The stock seems to be have run up exceedingly high. It's come back towards a multi-year breakout for itself, but then I would believe that maybe a fair price to buy the stock on a technical basis would be closer to 140, 138 mark. So you can start buying at current levels, but then keep some powder dry in case of the stock corrects to 138.
All right, this next one is coming in from Sagar, and also because we spoke about Zomato, that's the only reason why I'm taking this particular query right now. Mr. Chokalingam, Sagar has Zomato. He already is holding 750 shares at a price of 50 to 51 rupees per share. One of those lucky people who tried to catch that particular stock at those levels, because after that only one-way move for Zomato is what we've seen. So he wants to know whether this results, the excellent results that we saw, a good turnaround from Zomato, do you think it's a one-off, or do you see a continuation of this particular momentum coming in for Zomato, where they've now turned profitable and the only way forward is just adding on to their profits?
It is not one of it can add on to the profit, but then the valuation comfort is not there. I mean, in my view, the price it deserves after 2-3 years is already quoting on the market. So therefore, I would give a sell call on Zomato.
Okay, that's a sell call coming in on Zomato. But Kunal, what's your take on Natco Pharma? Ravi from Vijayawada has bought 100 shares from a price of 985 rupees. What's the technical outlook for the next 3 to 6 months time horizon?
So stock seems to be overbought at 840 mark. I think that's where the stock made a short-term top, corrected towards sub 800 levels, and now back towards 820, 825, which means on the way up, the stock should face a resistance at this 840 levels. I would believe that if you're looking to average for Natco Pharma so that it can reduce the cost price, that should be done maybe closer to 760, 780 mark in case if the stock dips back to those levels in the next 1 or 2 weeks.
All right, this next one that I have is now coming in from a viewer from Jaipur. This is Homnath from Jaipur, has 50 shares of Rossari Biotech at price of 1,168 rupees per share, has 50 shares of TCS at 3,785, and there are other stocks as Sterling and Wilson's as well. But he wants to know what should he do with these counters. So Rossari Biotech and TCS. Kunal, what's your view?
So Rossari Biotech, again a very tricky kind of a chart, not too much exciting on the long-term basis. The 2021 high was 1600. The stock fell down to as much as 1600. First 2-3 months of recovery which you've seen for the stock price, but then I would wait out for a confirmation about 900 mark for Rossari. So if the stock happens to cross and close about that 900 mark, say on a weekly basis consistently, then you can consider buying or averaging the stock. TCS, I think at buying at current levels would actually be a very good strategy. My belief is that many of these IT stocks are very close towards an ending phase of a major correction which has been lasting for the last 1.5 odd years for these IT names. So I think it's a good time to try and buy the stock if you're a long-term investor.
Okay, Mr. Chokalingam, the next question is from Akash Mathur, and he's holding 300 shares of RBL Bank. The stock has been in the news recently after M&M bought the stake, but Akash is at a 12% loss right now. So what should he do? And he also recently bought 50 shares of NetWeb Technologies, a recently listed play. So what's the advice going ahead in both of these names? Is that a whole sell with a medium-term outlook?
You can hold on to RBL. Of course, I'm not a great admirer of RBL Bank, considering the past performance in the business as well as stock price volatility. But since he is losing and the stock also corrected a lot, and now it is coming closer to one-time book value, he can hold on. In the technology company, he can sell, because 9 out of 10 technology companies, I'm not talking about stocks like TCS. I'm talking about small and mid-cap stock. They do not have valuation comfort. So I would suggest sell on NetWeb Technology.
All right, this one is coming from Anu, writing to us from Gurgaon, and Anu has 4,000 shares of Tata Steel from last year at a price of 121.4 rupees per share. Kunal wants to know what should she do with this particular counter.
Definitely stay put for Tata Steel. I think the metal stocks have just started to get into a turnaround. There has been an immediate sell-off which has happened for these metal stocks because of how the indices and the global markets have shaped up. But I would believe that this should be a decent lasting phase for these metal stocks in terms of rally. My sense is that Tata Steel should come back towards at least 140, 145 in this leg of uptrend. So which means a potential upside of another 15-18% for the stock price. So I would suggest a hold.
Okay, Mr. Chokalingam, what's your take on Delta Corp? Balaji from Chennai has been holding 100 shares from a price of 184 rupees and no respite on that 28% GST. So what's the outlook? Should he continue to hold on for some recovery out there, or book at this point in time at no profits, no loss?
I think one should sell. I myself once in a while go for this Delta Corp, But certainly, if I have to pay 28% tax, I will cut down my visit to casinos. So, I mean, there is no valuation comfort as well. So, one should sell Delta Corp.
All right, so that's a view coming in on Delta Corp. The next query that I have is coming from Ande Subramaniam, writing to us from Telangana. And Kunal, Vardhaman Holdings is the counter, purchased at a price of around 3,050 rupees per share, about 15 shares. The viewer wants to know whether to continue to hold on to it or look to exit this particular counter. It is actually below his buy price, quite below his buy price.
Yeah, and I think it's been an extremely illiquid stock. I think if I'm not wrong, the average volume just runs into 200 shares a day. So I'm not sure what's the rationale of buying the stock. It's been a huge underperformer in the last 5-6 years. 2018, the stock made a high of 6,200, and since then it's just been going into some selling pressure. There have been bouts of rallies, but it's those rallies have not been able to let the stock cross back above that 6,000 level. So I would believe that it's always better to exit these kind of names, especially the fact that it's extremely illiquid. So switch to a formidable large cap stock, and especially a liquid one.
Okay, Kunal, what's your take on Delhivery? Jaya from Bangalore has been holding shares from a price of 380 rupees. So any target price on this one?
Well, I think we should look to hold on as of now. There was a very strong bearish candlestick for Delhivery, I think in October 2022, when the stock had fallen from 570 to 370 in a single day, or I think in a series of couple of days. I believe even if there is a retracement of 50%, the stock should come back towards the midpoint of this 570-370 mark, which means closer to 470 levels. So I think from a near-term play, I would believe 470 could be a target which you can keep in sight for Delhivery.
All right, this next one that I have is coming in from Dr. Subaya from Tamil Nadu. He has two queries. One is on Cummins. We've already spoken about Cummins earlier on the show actually, so you can tune in later and check that particular view. But we have also, he's asking about Gillette India on short to medium terms. Kunal, how does this one look to you? Gillette India is what he's asking.
Well, attractive chart. I think last 2-3 months it's been seeing a good recovery from 4,200 to 5,800. Confirmed a breakout on swing charts. So if you're looking to buy, then this could actually be a good time where you can look to add the stock. But again, the caveat is that even this is a highly illiquid stock. For example, on a day like today, when the markets have seen a recovery, the average volume is just 2,000, 2,500 shares. So keep that in perspective that you are looking to buy an illiquid stock.
Okay, moving on, and Mr. Chokalingam Vishaka of Kolkata has been holding shares of 50 shares of Aster DM from a price of 250 rupees. So at this point in time, should he continue to hold on or book profits? And also want your advice on Anant Raj. Though Kunal has been bullish on this particular counter, but on the fundamentals, what's your take? He has 100 shares from a price of 108 rupees.
One can sell. Most of these healthcare stocks do not have valuation comfort. Yes, I do understand that Anant Raj has got a lot of historical land bank. So therefore, one can hold it, but I would sell it if it jumps another 5 to 10% from the current level.
Okay, Kunal, I just want to check if you track Vishwaraj Sugar by any chance. Poonam has been asking us on that particular counter.
No, not really.
All right, let me take the next query then. This one is coming from Sajay. He's writing to us from Kerala and he wants to know about Jubilant Pharmova. Is it a hold? He has a loss of about 40% on this particular stock. Kunal?
Well, I would suggest an exit on Jubilant Pharmova. I think if I'm not wrong, the stock has been an underperformer even in the recent past. Now trading at, I think, sub 400 levels from a previous high, which was, I think, 550, 600 plus the last I remember. So I think it's a stock where you can look to exit, and there are so many other pharma names which are looking fairly attractive. Two names which I can recommend at current levels. One could be Granules. The stock has given a recent breakout on the short-term charts. And the other is what you can look out for is Ipca Labs in case if the stock corrects back towards 850, 870 mark. Those are two better alternatives which you can look to consider.
Okay, so those are the alternatives that you can look at. But with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now Sell Now on ET Now. Let's continue taking all of your stock-related queries. And this one is coming in from Mativanan from Chennai. I want to know about Som Distilleries. 200 shares at a price of 50 rupees per share. wants to know whether to hold or actually add on to some more of this particular stock. And Kunal, 50 rupees was the buy price for Som Distilleries. Right now the stock is hovering around 330. It hit its record high levels also recently. What should he do?
Yeah, I think it's been and congratulations to the viewer because holding on to such a kind of a stock which has been extremely high beta, I think requires a lot of patience as well as courage. So congratulations to you. Now I think at 360 levels, I don't see any reason why you should look to exit or even book profits, because such kind of breakouts, they generally take the stock to a different multi-year uptrend. Now the question is that how far you can hold on to the stock on a longer term basis, because the stock would probably get into a phase where it may moderate, it may see a correction. But since you've bought at such lower levels, you have a significant buffer at place for Som Distilleries. I would suggest a hold on the stock, and possibly in the next 2 years or 3 years, we may expect the stock to come back to 550, 600 plus levels as well.
Okay, so that's the take on Som Distilleries. But with this, viewers, let's kickstart taking all your stock-related queries in the rapid-fire session. And Mr. Chokalingam, the first question is coming from Subramaniam from Chennai. He's holding Himadri Special Chemicals, sitting at a profit of 15%. What to do next?
Sell.
Okay, this one is coming from Puneet and ACC at the levels of 2,030 rupees per share. He just wants a target for this month itself, Kunal.
2,120, broadly I think I would probably keep that as a target for ACC.
Okay, Mr. Chokalingam, Ayush has been holding Caplin Points and Thomas Cook at good gains right now. So is this a good time to hold or exit?
He can hold Caplin Point. The Thomas Cook he can sell.
Okay, City Union Bank 2,000 shares at a price of 179 rupees per share is what Raghu has. Should he stay put with this one or should he look to move to another stock, Kunal?
Ideally, I think I would suggest a move out of the City Union Bank and moving to Federal Bank.
Okay, Kunal, so Brita Mukherjee wants to buy SBI today. What's your advice? Results due as well.
I'll wait out for the results to pan out, but whatever be the case, I think 575 could actually be a good level in case of the stock dips.
Mr. Chokalingam, Sridhar from Hyderabad wants to know if it's a good time to invest in Adani Power for a period of at least 3 years.
I have not tracked Adani Group stocks, so I am not able to give any view.
Okay, Kunal, Srinath wants your advice on Adani Green Energy as well as Olectra Green Tech. Can he initiate a buy at this point in time or any other price that you wish to highlight?
No, I think I would wait out for a correction. At least a 10 to 15% correction into both of these stocks could be a better level you can look to buy.
Okay, this one is from Jacob Phillips, and Jacob has invested, and I quote, handsome amount in South Indian Bank. Wants to know what's the future of the bank. Makes sense to stay put with South Indian Bank, Mr. Chokalingam?
He can sell and buy Bank of Maharashtra.
Okay, Kunal, Debashish has been holding 50 shares of Bharat Dynamics along with HAL and BEL and sitting at more than 50% profits right now. So, in all these defense names, should he book profits or hold on?
I would advise to book profits for majority profits into both of these names.
Okay, Jamuna wants to know about Elecon Engineering, worth a hold or exit. Kunal, buy price has not been given.
Well, I would suggest to book profits on the stock.
Mr. Chokalingam, Nayan Gandhi wants a suggestion whether or not to buy Saregama for a long-term investment horizon.
I would suggest sell.
All right, and with that, we actually come to the end of the rapid fire, the query segment, as well as the Pashala edition. Thank you so much, Kunal, as well as Mr. Chokalingam for joining us on this edition of Buy Now, Sell Now. And with that, viewers, we come to the end of this week's edition of Buy Now, Sell Now. So it's goodbye from Shrishti, myself, our producer Abhishek, our director Santosh, and the entire team. Thank you so much for watching us. We'll be back next week.